Hello and welcome to Wyckoff Training Academy. This is the second part of my indicators uh, video, which I had recorded 2 days back, I guess. So let me pull up my chart. This time, I hope my voice would be clear to everyone. Okay, now I think the chart is visible. Just give me a minute. Okay, so by now, I've like in my recent last video, I have covered once. So in the last video, I had covered version how to trade based on version 178, 180, 181, 174. Okay. So now, first, let me bring up gold chart, xauusd. So now in this video, what I'm going to do is I'm going to uh, go through that is multiple time frame, price and volume, which is based on the original indicator of David Weiss with certain adaptations and some certain modernization into it, and I added some new features into it. So I'll have I'll hide all the indicators so that we don't get confused what is happening over here. So now this is the I'll go to 1 hour time frame. So here you can see how to use this thing. There are one gray line that is zero level. There is one black line which is much which is showing the price movement. There is one red and green color line. Whenever it is green, that means prices are going to go upwards. Red means prices are going to go downwards. So now, what is this indicator? This indicator is basically a trade timing pullback system, wherein whenever the price, first thing, how should I time my trade? The main the criteria for planning a short selling opportunity per se is this red line should be less below zero level. First condition. Second condition, as soon as this black line comes below or crosses down this zero line or and red line, and it touches back and it comes back and touches the red line. As soon as the price turns down from this particular point, I'll go for a short opportunity. So now to assess that, I would use 180, 181, 178, this indicator. So now I want things to be in sync with each other so that if now by this point of time, by the opening of uh, like on like today is 11th November. So today by opening, we knew this is market is going to go downwards, and now herein I've applied 1 second. No, it's imbalance. Here I had applied normal price pullback. I want to see low volume pullback because I'm planning for a trade. Okay. So there is no whatsoever low volume pullback. So that means there was no effort to take this market down, but rather the volume pullback over here. So if this is a pullback and I had a clear indication that price is going to go downwards and this is has broken down, it is coming down on a 1 hour time frame. So if you are a multiple time frame kind of a trader, you would go in and out and you uh, you will move down to the lower time frames and you start to look for an opportunity. But having said that, if you're trading on 1 hour, any of this particular price bar, like I haven't applied version 155 to it. If you apply one version 155, it will give you a clear indication whether which candle particularly you should go for a buy on. If not, if per se, for sake of discussion, if you're not applying heavy volume to it and you're only applying a price pullback, so on in that case also you got a pullback at this particular point. So that means there was price continuation towards downward side. This particular price position was acted as a pullback, and then there was a price continuation towards the downward side. So this helps you in understanding this kind of price behavior. So now, if you have 1 second, let me put up 155 version. So you will get a fair idea of what I'm actually talking about when it comes to version 155 or like see over here. This is the buying absolute buying kind of performance and no supply. And after that, if I get this kind of supply kind of uh, supply like is greater than demand, like as per the Wyckoff basic demand accumulation markup distribution and markdown analysis. So you can see this is the right way and right entry point. So I would try to catch the trend over here. If I miss at this particular point, then rather I would like to enter once I get a heavy volume pullback and it is resulting in a downward price movement. So here, as I mentioned earlier, what I'm concerned about is this one. This is my stop or any price above the recent high. I will not place my stop loss over here because if you want, you can go for it because I have already a tool which gives me a trailing stop loss. So if the stop is here or you want to place your stop above this one or above the last swing, it is your basic like it is something wherein it is up to you to decide which side you want to. Like. I was talking about this entry when when we applied version 155, we got this two demand candle, which is greater than supply. And then after that, before that, we had no supply candle. So it was evident that prices are going to either go upwards or they're going to go sideways. Who has bought this version 155 uh, tape reading toolkit? They know how this tool works and how it gives you a clear and uh, like clarity in where which side has a greater power. Either supply has greater power to pull the market downwards, or either demand has greater power to pull the market upwards. So that is clear by this particular tool, tape reading toolkit. Now we got a supply over here. We missed the entry over here. We haven't got a pullback confirmation from this particular point. But now everything is in sync. If you entered, not entered over here, as soon as it turns down from this particular point. Like there might be some cases wherein it would touch. If you're waiting for a perfect entry, then wait and watch for the perfect entry. If not, you can jump into a trade based on this analysis. So let us find a perfect opportunity. Now, this is what a perfect entry would look like. Here, it is touching this particular line, or to some degree. One second, let me zoom in a little bit so that we would be in a better position to see what is. And this is the area wherein this we had a breakdown. Red line selling is evident because red line is below zero level. Then black line goes down. It touches the red line. We got an entry level over here. I'll enter over here or anywhere I would place my limit order underneath the low of this particular candle. In this particular case, my stop loss would be this, or either ways, this one would be my stop loss, or either this would be my stop loss. Because my trading style is completely different. I don't want to wait for this particular stop to be hidden. If I'm wrong, I want to prove, like, if market will prove me wrong in this particular duration. But there are certain times wherein there is high volatility or low volatility kind of situation. So it is up to you whether you want to place on the swing or 10%. Like many people have their own different criteria. So I'll keep the stop loss placement open to uh, traders so that they can do based on that. And here we got a good point and then a good trade. So yes, the and same goes with all the time frame. It will work in the same manner on all the time frame. Here, like the 8th of November, 8th of November was a no trade zone day for us because you can see if you use this trade timing tool, it will help you in staying away from the sideways market. It will give you a trading opportunity. In most of the cases, it will give you a trading opportunity wherein we had a greater opportunity of market going into our favor are planning to trade based on. So this is how it happens, and it has to be done in the same manner. So after this tool, I'll go to on just taking the important concepts which has to be touching on the important points which are to be taken into consideration while taking trade based on these tools. So if anyone wants any detailed analysis because visual tools and parameters, then I'll be glad to make it for you people. So please do let me know when in the comment box below of this particular indicator. You will I'll be glad to help you with like help you in any way uh, to explain you how to use this particular tool. So this is nothing but wave selling waves. If market is going to go downwards, we want to see red waves that correspond to supply should be greater than demand, which is the green bars. So if the selling waves are increasing, that means, and price is also moving in that particular downward direction. Price is also coming down and the waves are increasing. What is about to follow is downward price progression. So here I have what I did. Like if you're, this is basically a tool especially for like any people person trading on a 1 hour time frame can also take help of this one. Like this shows you the last 4 hour individual 4 hour candle direction, whether it is up or down, whether it is volume is down or volume is up. When it comes to daily, it will show you last daily up volume, whether it is up or down. Like in case of weekly, here it is showing us a red circle with volume is down. And for daily, it is showing us volume is up. So you can plan your 1 hour 1 hour trade based on what the higher time frame is telling you. So that is the reason I kept the name as multiple time frame. Like you can see, this is the last, and this is the second last candle. So the volume is up. Now, if you go to weekly, if you go to weekly, sorry, this was not promotional session. So if you go to weekly, one second. If you go to weekly, weekly is down. As you can see, this weekly and the last candle is down. volume is down. That means supply is greater. So if market came down on a and simultaneously your 4 hour, if you look at your 4 hour, it is down since morning. It will say since morning it is showing you a downwards movement. So we have a pullback. This is a very beautiful tool for trading on any time frame. So having said that, what you have to do is just to follow and align your trading time frame direction with your, if you want to go for a high probability trade, align your trading time frame bias with trading time frame bias and with the higher time frame bias, and if they correlate with each other, open a trade. That's it. So when green bars are forming, that means green histogram is forming, demand is greater. When red histograms are forming, supply is greater. Simple as that. Even if there are many traders who want to use vice wave, who don't know how to use vice wave, and who find it very difficult to use vice wave, because the difficulty is when you switch to time frame or you switch instrument. So what happens? You have to do manual adjustment. It will choose the best possible wave size for this particular XAUSD gold spot market on a time frame. If I switch back to 5 minutes, or even if I switch to 15 minutes, it will give you a proper view of market where if prices are, if there is a downtrend, then there has to be demand greater than supply, and if there is an uptrend or what you can say sideways, then either it has to be equal in proportion, or either ways, like you can see we are seeing equal proportion kind of thing, though the supply is more greater, than demand. But having said that, we have to use all the tools together so that it is not about. I'm telling you upfront because many people come to me and they say, "Sir, we want a system wherein we should get this much of number of trades." I believe in quality of trades and straightforward. If you want best quality of trade, you will automatically your number of trades would reduce. But the quality of trade means quality equals money, or quality equals profit, which equals your money or your earning. So simple as that. So please do watch this video. If you have any doubt, any concern, please drop me a message in the comment box. So I'll try my level best. And especially to those people who are like, especially this video is for people who have already bought the system. Please go through the video, review it again and again, and to your fullest satisfaction. And after that, you can start trading based on that one. Like I said it earlier, version 179 pullback. When this kind of scenario is happening, green line is below this one, zero line, then we should not get into trade. Same case over here. Same case over here. So you will miss this opportunity, no problem. But when you will get the opportunities, like for example, look at this particular pullback. Just look at this particular pullback. The amount of profit which you would be able to, like, which you would be making if you got into this particular trade. For example, let me draw a short opportunity kind of thing. This was the first trade. Okay, I'm not extending it. This was the second trading opportunity. This is the third trading opportunity. And this particular current time frame, prices are going to go going downwards. So here entry levels. If I delete and make it adding higher time frame to your like for example here, even if you're stopped out, your loss would be very minimum. This is your point. Third entry. It yield you. Even this acts as the exit also. As soon as it crosses, you can exit to 1:1.5. And if I, this is the third trade, and if I consider second entry, this was like I think because here this is two. Like on both the trades, you got one trade yield you 1:1.5, 120 you can see. So it is 1 is to 3 point 3.70 approximately. So on a 1 minute time frame, increase. So for Forex, I always recommend, especially for XAUSD, I always recommend you should go for a trade on 15 minutes. Don't try to go for trades below 15 minutes. Though I personally trade on 5 minutes, but I don't advise anyone to go for, because again, based on your practice and dedication and understanding of the system, because these systems are purely working based on price and volume, nothing apart. So the the signals and the analysis which you come up with this one is, it will if you practice it properly, what based on my experience, like in my with other students in the past, you can achieve 80% accuracy. By 80%, I mean, like if you're planning for 80% of the time, if you are planning to trade with a bias of going market going upwards, your 8 trades would should definitely go up. This is what my take is on this one. So I'm talking about 80% of the 8% of the time, or 80% of the time, if you understand and if you apply the in proper context, market would go in your favor. What profit you're going to make, how much money you're going to make, that is a different part. Because what we are concerned with safeguarding our stop loss, taking care of our stop loss. Let the market take care of our profit. Simple as that. So this note, I'll end my presentation or end my this recording. You can go through it and just give me a feedback. And if you want anything or any detailed video on any particular indicator, so I'll try my level best to make it within a day or two. Okay, bye bye. Thanks for watching this video.